really to relaunch this proposition to the market. And we're looking over a period of about 3 years to do up to 100 billion Kenya shillings of asset financing in the Kenya market. So we have big ambitions. There is a great opportunity for us as Absa to participate in driving the Kenyan economy forward. And as you know, asset finance is a very key part of the GDP growth of our country. And so that's why we are here today.
What are the major expectations, the things that investors can expect from now on?
Well, what you would expect from Absa, as always, is a great product. You will expect speed of execution, speed of decision making, leveraging on technology to ensure that our customers get the best service and the best customer experience possible. But more importantly, you will see that we are bringing great partnerships into this equation. If you look at the room today, all the key partners in the asset finance ecosystem are here with us, from vehicle dealers to agricultural equipment, to medical equipment, and all the other areas that we are covering. So we bring these partnerships, we bring Absa's own expertise, and we bring good service into the equation.
Maybe, is it possible you can differentiate between the 2.0 and the previous one? And how do you foresee it in terms of giving access for SMEs and mid-sized enterprises?
Well, I think one of the key differences is we've previously focused a lot in the corporate sector. Today, what we are here to launch cuts across all the key sectors of the economy and the key sectors of our customers. For example, the SME sector has previously not participated very much in the asset financing space. What you will find is customers take facilities that are unsecured to finance assets. And we want to correct that in the market. We want to ensure that the SME sector is playing a bigger role. And the only way they can do that is to ensure that they have access to affordable credit that allows them to purchase assets. We also are looking at the personal sector, me and you, in terms of how people finance cars, electronic equipment, other consumer durables, and how that gets covered as part of our asset financing. So I think one big change is that we are covering more sectors. The other one is really bringing in our partners and working with all these key partners in the ecosystem. We've also looked at the client requirements in terms of what percent of the asset gets financed. And across most of the products that we've talked about today, we're talking about 100% financing, quick turnaround time, affordability. That's what we are bringing to the market.
And maybe looking ahead, what metrics are you planning to use to gauge the success of this new version, maybe in Kenya and East Africa?
Well, of course, at the end of the day, we can talk about the specifics of the numbers, how much we are going to lend over the next 3 years. That's 100 billion, and we'll be tracking that over time. But for us, I think what is even more important is every customer has a vision for their business. And the more customers we can enable, and there are great stories out there of clients in the agricultural sector, in the health sector, in the education sector that we have enabled. I think for us, that will be a key success factor. If you look at the schools and the education sector today, many schools are looking at transport, school buses. Schools are also looking at things such as energy solutions, green energy, solar. All of this is covered as part of the asset finance proposition. So for us, in addition to measuring how much we lend into the market, one of the other things we'll really be looking at is those stories. What is it that we are transforming in the Kenyan economy?
And maybe finally from me, are there asset classes that you are planning to prioritize, maybe out of the how many, 7 or 6 etc?
Look, I think agriculture is a big one. It's a key driver of the economy. Tractors, other agricultural equipment, that's a key area. The medical sector is another key area where today there is a need for more equipment, whether you're talking about testing equipment, labs, MRIs, dental chairs, etc. And there are a lot of clients in that space that talk to us about some of the products that they need. So medical is another area. Education as a sector is another area that requires a lot of asset financing, and that's a key priority. So the way we approach this is not to say this is the product from the bank, but it's to approach it from the customer's perspective and say, what are your key priorities? How can we make it work for you? So that's going to be our approach going forward. Thank you. Yes, yes.
Kindly, could you speak about maybe some ESG incentive that the revamped system has, and how are you going to approach it?
I think across all our lending, ESG, as you say, and it's a very important topic, is a critical aspect that we measure. And we look at, for example, how much of the funding that we do out there meets the climate requirements, can be classified as green financing. We do this across corporate, the middle segment, business banking, as well as personal. And so as we fund assets, ESG is a key measure that we continue looking at. And as I said, a key part actually today of the assets and equipment requirements is around clean energy, solar, and some of these solutions that also tick the box around ESG, which is quite important as well. Thank you very much. Thank you. Yes, boss.
James from the Standard newspaper.
James, it's a pleasure to see you, sir.
Pleasure too.
Karibu sana.